Well, in addition to creating the audit committee and some other aspects in the accounting world, SOX 2002 also created some penalties. And these penalties are there to protect the integrity of an audit, the integrity of financial statements. What are these penalties? Well, you will receive 20 years in prison for altering. This is editing, destroying, covering up, modifying, forging documents protected by the Sarbanes-Oxley Act. And this is going to really have an encompassing effect if you are modifying bank statements, if you are editing audit work papers, if you're changing any documents that can prove that the financial statements are correct, anything in that nature, loan agreements, legal documents, any altering evidence is going to land you 20 years in the slammer, and you don't want that. So don't commit any fraud. Don't change the documents. Keep them in their original source. You will receive 10 years in prison if you're an auditor and you don't retain your work papers for 7 years after the end of the fiscal period in which the audit or review was conducted. So 7 years. Make sure you memorize all these dates. You're familiar with them. Now, why 7 years? So it's just what they agreed upon. And what's the point here? Well, auditors have to retain their work papers, which is proof of how the audit was conducted, for 7 years. After that, you can destroy them. We want to make sure that if the government wants to investigate how we conducted an audit because maybe there was fraud in that company and we missed it, or they want to look at our work papers, see if we just didn't do a good job auditing. It's just proof, right? If there's any investigations that happen through this, those work papers are there as evidence. After 7 years, you can destroy them. It's just at a certain point, you got to get rid of things, right? Storage space. And at a certain point, all right, it's in the past. And that's for audits or reviews. The statute of limitations. So a statute of limitations, that's a law that sets a maximum amount of time after an event has occurred that someone can come after you, essentially. It's meant to ensure that claims are brought forward in a timely manner and that you're not looming with the threat of litigation for years and years to come. So the statute of limitations for securities fraud is no later than the earlier of 2 years after the discovery of facts constituting the violation or 5 years after the violation. This would be the statute of limitations for committing fraud. So commit fraud, not legal advice, but if you commit fraud, just wait 5 years and then they can't come after you. Maybe they can, maybe in the real world they will, but per our exam, this is the rule. Lastly here, any individual who knowingly executes or attempts to execute security fraud will be fined or imprisoned for no more than 20 years or both. Make sure you're memorizing these points because these could be multiple choice questions on the exam.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.